Welcome to our commercial webinar, where I'm delighted to be joined by Nick Jones, Head of Specialist Distribution from Together. So firstly, who are Crystal Specialist Finance? We are a specialist finance distributor with over 80 lenders on panel across our 6 main business sectors. On there we include both exclusive and semi-exclusive products and lenders. We are 100% dedicated to the intermediary, including training, BDM visits and ongoing case management and case handling. And as you can see there, we are multi-award winning. We're a family-owned business with over 200 years collective specialist finance experience. And our motto, as you can see, is making specialist finance crystal clear. This is just an example of a couple of awards that we've won over the last few years. We're passionate about specialist finance, so what does that mean to you? First of all, you've placed your trust and your customers' trust in us, so it's up to us to talk to you to provide updates on your cases and not hide behind technology. Technology is a great facilitator and an enabler, but it shouldn't replace the need for specialist people. We know we're only as good as the last case we've dealt with for you, so we want you to send the next one. So it's up to us to assist and support you throughout the life of that case, and sometimes even beyond that where needed. Our flexibility means that we can find unique solutions for your customers, and our experience means that we have relationships with many lenders that no one else in the industry has. We aim to respond quickly and to complete your case in as short a time as possible. Our model is built around basically no win, no fee, so if we don't complete your client's case, we don't earn any money. So for us, it's about making sure we can deliver and that we can deliver in a timely manner. We're very big on education, so events like this today, where we try to provide you with updates on market trends, provide you with webinars, material, information from lenders, to make sure that you are one step ahead and that you can assist more and more customers when they come to see you. And specialist finance is a huge opportunity. It can appear daunting, however, we'll assist you with your current case, but also help you to find new ones as well. Any fees will be discussed and agreed up front, so there are no hidden surprises for your client at the back end. And we're all human, so we are aware that cases will hit problems. It is the nature of specialist finance that it is tricky, it is difficult in certain circumstances. So it's up to us to proactively take action to seek to resolve the issue, to provide an alternative lending solution, or give you a heads up as early as possible that this is a deal we're unable to help with. Having said that we are people focused, for us internally the work is continuing on our technology proposition. It's up to us to provide market-leading specialist finance technology solutions. We use these as a way to deliver on our promises and to make our internal guys' job as easy and straightforward as possible. As you can see there, we've got over 200 years combined experience in the specialist finance sector. We don't do anything else. We don't do vanilla. We don't do insurance conveyancing or anything like that. For us, it's purely about the specialist finance market. We know our strengths. We stick to them. We do it well. So our strengths are in the specialist finance market. We know the true breadth and depth of products available. We understand each lender's appetite and we work closely with them to understand their processes to ensure we can get your deal done quickly and efficiently. So again, it's over to us to explain to you the process, timescales, what's required from you and your clients in order to get that completed. A few examples there of where we really do excel, things like adverse credit, low credit scores, tight completion deadlines, overseas borrowers, unusual property types, or where we have to consider all income sources. We're also very proud to be part of the Together Plus Club. So this means we have our own dedicated team of underwriters at Together, and we can offer all of their product range from first and second charges, consumer buy-to-lets, through to commercial and bridging. What that means is that we work with very highly skilled underwriters, with an underwriting team leader, very closely with other senior members of the team at Together, and we're trained regularly on what they will do and how their processes work. So therefore, we can get solutions to complicated cases, we can fast track your applications, and we have exclusive products available, which we'll come on to in just a second. For those of you that know of Crystal, you'll know that we are commercial finance experts. It's what we started doing many, many moons ago, and it's something that we continue to do today. So it doesn't just refer to a smoggy factory and cement building that's 20 stories or something like that. We can still do those, of course, but there are various use cases for commercial finance. Your retail unit, shop with flat above, maybe a warehouse or an MOT centre or something like that. Pubs, restaurants, hotels, any kind of property you can think of with a commercial usage, we will look at. Of course, you can refer a case to Crystal where it's non-regulated. We will take a client name and number off you and do the work from there. Keep you posted, keep you informed, and we'll pay you the same as if you were involved yourself. Really depends on your relationship with the borrower and how much you want to get involved with the transaction. Commercial is a little bit more complicated. Most residential lenders now have gone down the vanilla, almost tick box route, where if you meet certain requirements, you can have a loan. Commercial is a lot more different to that. It's more like old-fashioned banking, where the lender wants to understand the borrower, they want to understand the people behind the business, and really get to the bare bones of the transaction. So they will look at bank statements in more detail and want to understand the performance of the business over 3, 6 or even 12 months. If the applicant is running an existing business, they will want to see what income's been declared. Most lenders will also look for accounts, anything from 1 to 3 years dependent on who you go to. The client will be asked to prove that they're solvent. Solicitors' process will take a bit longer, they are more complicated. A lot of the searches can't be indemnified against, whereas they can in residential. And the due diligence from the lender will be much more intensive. That said, we can still complete cases in 2, 3, 4 weeks if that needs to happen. It all depends on what the client needs to do and what's more important to them. The value of using Crystal is that we can help with those administrative headaches and the document chasing. I mean, it doesn't have to be a burden. It is complicated, we understand that, but let us take over that process. The comprehensive lender panel, full of great relationships and multi-award winning staff, we are well placed to help you complete more specialist commercial finance business. Another really innovative option that we can offer you are the homeowner business loans. So a client might want to raise capital for their business, but might not have the current level of equity necessary in the company assets. So one option, of course, is unsecured business finance, which is possible, dependent on the trading history and trading strength of the business. But we do have a loan available on the director's property. So 2 options there. We can either do second charge on the customer's home, as long as it's over 26,000 and for business use, then that is available to them. Or secondly, we can structure a loan to a limited company with the security address being the director's home address. And this is either done on a first or second charge basis, dependent on what's needed. So the benefits there, we can either do it as a loan to the director that he can then inject into the business, or we can do it as a loan direct to the business but secured on the director's properties. So again, it's all about that personal approach. It's about understanding what's best for the client and best for the transaction that you're looking at. So very quickly then, commercial finance rates from 3.15, we can go up to 80% loan to value. There are lenders considering adverse. Loan sizes can go up as high as you want them to. Obviously, the higher they go, the more difficult they become. You can have fixed rates available, terms up to 10 years. We've got owner occupied, we've got investment options there. Interest only still available from certain lenders. We can look at any borrowing entity, as long as the property's in the UK. Experience, nice but not essential. We can do low value properties, we can do projection-led income, and semi-commercial is a real boom area at the moment as well. So looking at a couple of case studies where we've worked really closely with together to obtain some very interesting solutions for clients. So with this particular one, Food Group, 9 directors of the company secured a £1 million funding package for their business, and due to lack of equity in the commercial premises, it was second charge loans secured across their homes. So they needed to clear an existing bridge and put some money back in the business. So we sourced Together's homeowner business loan for the directors of the business, allowing them to borrow against their residential property, put it into the business. So this deal was a little bit complicated because obviously the number of borrowers, the asset that we're securing against isn't the commercial property, and there were various different personal circumstances for the directors involved as well. So we grouped this into 2 linked cases to make sure we could get the very best possible rate for them, and the entire process, including consent, documentation, valuations, etc., legals, etc., took under 6 weeks. An excellent solution for the clients. Another example of how the homeowner business loan is an excellent solution for some of your business clients. Customers were looking for £1 million for their ice cream business to be able to purchase some additional machinery. Problem here was equity. They initially were looking for an unsecured loan or a loan secured on the asset itself. However, they'd been declined by the main lenders that would provide this solution for them. 10 shareholders, all of whom could act as guarantor, all owned their own home. However, their wives were not happy to guarantee that. So we sourced the homeowner business loan, secured across 8 of the properties without the wives needing to be involved, done at 5.99, so much cheaper than a lot of the unsecured borrowing options. The clients could have this on an interest-only basis for 10 years as well to keep costs down even more, pending sale of the asset or sale of the business. Even more complicated here was a little bit of mild adverse for one of the shareholders. However, by restructuring the deal, we could make that work and get that through still at that very low rate. So very quickly then, how it all works. Contact us any way that works for you. Email, portal, phone, come and visit us, see us at any of the numerous events that we do across the year. The key there is to place an inquiry with our new business team. Let's have a conversation, let's understand what you're looking to achieve. The team here will then source the most competitive product and issue the most relevant terms to you. Once you receive that, you can discuss that with your client, get them to apply, complete the application forms, pay the valuation fee where appropriate, and get that case into us. Our processing team then take over the case and will handle every step of the way there and keep you informed. Key thing with us as well is that we also work with the solicitors to get the case fully completed and funded. We don't see our job ending when an offer is issued. For us, it's about getting that money released to the client to either put into their bank account or to pay off their existing loan. And again, as I mentioned at the very start, for us it's no win, no fee. So if we don't complete the transaction, if we get all the way through to legals and then there's a hiccup, we don't earn a penny. So for us it's about working through the problems, identifying where we can fix them, where we need to come back for further information, and really looking to add value to that transaction. And there's never been a better time to look at specialist finance. The market is changing constantly. Client demographics are changing, products are changing, property types are changing. And of course, lender processes are changing and adapting. So for a mortgage broker, it is a very tricky time. So therefore, pick up the phone, speak to the team at Crystal Specialist Finance, and let us really add value and help you with those more complicated cases. Well, that's me done. So thank you for listening to my part there. It gives me great pleasure now to hand over to Nick, who'll talk you through the Together offering. Thanks, Nick.
Thanks very much, Chris, and welcome everyone, and thanks for tuning in for this commercial webinar. My name's Nick Jones. I'm Head of Specialist Distribution over at Together. We are a specialist lender. We work very closely with Crystal on all of our commercial term business. So Together, we've been helping ordinary people realise ambitions in both residential and commercial for the last 44 years. We've moved with the times, constantly adapting to people's lives, finding innovative ways to give them what their borrowing requirements are. And we work with lots of different types of people, both residential and commercial. As a business, we like to think outside the box and consider individuals on their individual merits as well. Currently, we have a loan book of over £3 billion. We've had 4 decades of lending experience, very flexible lending criteria, and we look at individuals' needs to suit individual circumstances. And with over 700 colleagues, we've certainly been a business to be forced to reckon with. So what we can offer, our products are wide ranging for both residential and commercial, short-term bridging loans and also long-term term loans. So any type of property, whether it be residential or commercial, short or long-term, we offer the products. So these include things like bridging loans, both regulated and non-regulated, personal mortgages, both first charge and second charge mortgages, buy-to-let mortgages and consumer buy-to-let mortgages as well. The one we'll focus on today is commercial mortgages. This is based off commercial property. We also offer auction finance and development finance as well. So again, a wide spread of product areas and a wide spread of properties that we can lend on and help customers realise their dreams. So why are we different? We feel the world's changed, and so have people's property aspirations and circumstances. So what was once classed as unusual, shall we say, is now actually quite ordinary, or as we like to see it, the new normal. Our customers can come to us, and they come to us because we work with people, not profiles. It's what we call our common sense approach. That's why we prefer to let humans, not algorithms, make decisions, judging each situation individually and on its own merits, because we understand that every case and every scenario is different when it comes to us, and it comes to us as a lender. So the 4 kind of property areas that we look at, or the 4 types of customers we look at, is things like not your average purchase, which includes things like shared ownership, commercial, semi-commercial, auction and unencumbered properties. Not your average property types as well, so including things like ex-council maisonettes, self-built land, non-standard materials like timber or concrete or commercial property, plus poor remarks on valuations and maybe dilapidated homes as well. So it's all the different types of property as well. We're not just there for your standard 2 up, 2 down or your standard new build property. We also look at not your average incomes as well. So this includes things like self-employed, state and private pensions, benefits such as income support, family working tax credit, child support, carers, fosters, invalidity. We look at rental income, short-term 0-hour contracts, employed, bonus, overtime, family gifted deposits, builder deposits as well. So all different types of incomes, not just your standard employed or self-employed as well. And not just your average credit. We lend to all types of credit status and profiles of customers, right from very prime, right through to people who have maybe had credit blips in the past, or even some heavy adverse as well. Those with less than perfect credit histories. All types of customers are considered on their own individual merits as well. And we do, like we say, we like to manually underwrite applications as well, which comes from experience of being in the business of lending to customers with less than perfect credit ratings for the last 40 years. So today we're here to focus on commercial finance. Commercial finance, the very basic sort of understanding of what commercial finance is securing against a property where more than 40% of the property is being used as a non-residential dwelling. So it's being used for commercial purposes. Some of the uses for commercial funding that we get asked for a lot is things like purchases, remortgaging of existing properties, of commercial properties as well, or you could actually leveraging existing equity within their existing commercial property for debt consolidation. It may be for business growth or investment. You know, you've got businesses that are 12-month, very new, and they're looking to expand into bigger premises or move from rented premises into owned properties as well. And we can help with all types of upsizing and downsizing of commercial property, developing additional property portfolios as well, looking to increase HMOs, Airbnbs, and different types of commercial premises as well. We can lend to clear tax bills, improve cash flow as well, and renovate, refurbish, or extend existing premises as well. So commercial finance can be used in a multitude of different ways. And I think the big thing for commercial finance and the way that we look at commercial finance is not to overcomplicate it. You're looking at the property that you're lending to, you're looking at what they're looking to borrow, you're looking at the loan to value on the property, you're looking at the affordability of the customer. Working off business plans, projected figures. We're a very simple underwriting lender that can look at things in a very simple way. Looking at some of the acceptable commercial security, we lend in England, Scotland and Wales. So mainland UK, Britain. We will lend to the Isles of Egg and the Isle of Skye above Scotland and some of the islands above there. We'll lend to the Isle of Wight, but we'll only lend to UK main Britain, so we don't unfortunately lend to Northern Ireland, Jersey or Guernsey. But commercial security is very much, we can lend on any types of commercial security. So here's some examples that we've got here. We can lend to pretty much anything from a plot of land right up to a brand new commercial block of units and everything in between. A lot of the things we get asked for on a day-to-day basis are things like offices, retail units, restaurants, takeaways, hotels, leisure premises, industrial units, pubs and clubs, working farms, farmhouses, equestrian centres, all different types of commercial premises as well. We get asked to do lots of things like refurb and things like conversions, where the high street has been converted from houses into commercial premises over the years and now being switched back to residential for things like HMO, semi-commercial, part commercial, part residential properties as well. Anything can be used as acceptable security as long as it's got a title with land registry, it's got a value, and the customer's looking to borrow money where they can build a portfolio on it as well. There are elements of commercial security that we will consider on each individual merits. So things like if you've got member property, so if you've got things like social clubs, if you've got football clubs, if you've got golf courses, things like that, we can consider on their own individual merits. Typically anything where you've got an element of brand reputation, so if there's any place of worship or any type of education, then it's less likely to be the type of security that we can accept. But everything else, including land, both with and without planning permission, whether it be agricultural restrictions, whether someone's looking to build on that property or whether they're looking just to purchase it, turn it into premises by obtaining the planning permission, and then we can lend from there. So types of income. There are lots of different types of income that we can accept as well. We have no minimum income requirements, which is quite a strong start to when we're actually looking at applications as well. A lot of the high street banks will look for certain criteria around minimum incomes or minimum trading periods as well. We don't have those. We will look to lend to any limited company, LLP, self-employed, any type of projected income, any type of entity that we can sort of lend to. And we can accept both offshore companies, PLCs, sole traders, partnerships as well. We'll both use both GB income, UK taxable income, and also we can consider foreign currency income as well. Employed with bonus and overtime, and consider all types of employed income as well. Rental income, including projected rental income as well, if it's not rented out but they're looking to use that income or use this loan to refurb a property to be able to let it out. That's something we can look to use as well. 0 hour contractors will be considered as well. We can accept all forms of UK based taxable income that they can prove, whether that be through accountant's reference, through SA 302s, through projected income, or through bank statements. We can consider that for all types of different businesses as well. So it's a very flexible approach to income, and we have a very flexible review of how we actually look at it. We look at what's called a 50% debt to income ratio. So providing that the customer has more than half their income still available after they've paid all their secured debt payments, then we can consider lending to that customer as well. So applicant types, we will have a minimum maximum age of 18 to 80 years old, and we can lend to all types of trading businesses, so LLP, sole traders, limited companies, partnerships, PLCs, offshores like we mentioned before. We can lend to all types of commercial investment, so if someone's looking to set up an SPV just for commercial investment properties, we can look to do that. Or if they're trading businesses, we can actually lend to trading businesses as well as commercial investment. Up to 4 individual applicants, they don't have to be related, they can be 4 individuals coming together to purchase a property or to set up a business, and we can be a part of that as well. Family gifted deposits or equity as well, we can consider those as part of the transaction. Expats and foreign nationals, people living abroad looking to buy property in the country, we can lend to, as well as people who are looking to just purely invest in property over here as well. We can lend off foreign shores as well. And all of our loans are for any legal purpose as well. So if they are looking to do tax bills, or if they're looking to do business injections or gifts, then we can consider any legal purpose with regards to what they're using the money for as well. So some of the commercial product features we have. So at Together, we offer both first and second charge commercial mortgages up to 70% loan to value. We can consider up to 75% for some purchases, but again, it's on an individual basis based off the types of property that we're lending against as well. Our minimum loan size is £26,000, and we will go up to about £500,000, and we will look at larger cases, like I say, on a case by case basis, depending on what the quality of the customer's like, the property type, the type of transaction that we're looking to do as well. We offer from 7 to 30-year terms on our commercial term products as well, and we offer both interest only and capital and repayment options as well for the customer. Our minimum value on a property is £75,000, but again, if there is that flexibility, we will consider lower valued properties on referral. All of our valuations on commercial are based off 180 day, and we will consider open market valuation will be considered on the certain types of property that we're lending to as well. So typical things where there's elements of residential, if it's a semi-commercial property, if it's flats above a restaurant, or if it's both semi-commercial and commercial, we will consider the open market depending again off the credit history of the customer, the quality of the customer, how much they're looking to borrow, and the loan to value as well. We have discounted rates starting from 7.9. We will accept up to multiple properties as well, so we'll lend across a portfolio of commercial premises as well. So if they've got more than one property they can put as collateral to secure the loan against, we can do up to 100% of lending against the whole portfolio as well. And like I mentioned before, we have a 50% secured debt to income ratio on affordability. So again, very flexible product which is available in regards to the affordability. We also have a product range called the Homeowner Business Loan as well. So if you're not unaware of these types of products that we offer as well, so this is where you're securing a commercial homeowner loan, but it's on the residential property of the directors of the commercial business. So if you're lending on a second charge basis on a director's own home, but more than 50% of that loan is being used for business purposes, we can consider it on a non-regulated basis. And this is what we call our Homeowner Business Loan. So if you've got people who are looking to purchase or remortgage mortgage of an investment property. If they're looking to leverage existing equity in their current own home to put into a business for business growth, it might be an investment, it may be to purchase commercial vehicles, do up a buy-to-let, it may be to extend their own business to clear a tax bill, it may be to put a business injection into their business to allow them to win a contract. All of these business uses will be considered on a homeowner business loan. So from a commercial basis, it is a non-regulated transaction with ourselves, and we will class it so as well. So some of the product features of the commercial homeowner business loan are set out here below. Both first and second charges up to 75% loan to value, with a minimum borrowing of £26,000 right up to £2 million. Up to 30-year terms for the homeowner business loan as well, so giving you an extended period of time there. Minimum valuations at £75,000, but lower valuations, as we do have that flexibility, will be considered on merit as well. Both interest only, capital repayment options are available, and a discounted variable rate from 5.99 as well. So again, it's got a good strong starting rate there. Valuations are always based off open market valuation because we're laying on a residential property, and there are fixed rates available, and we will consider customers who have credit impaired as well. So a real flexible product, and a product that's a very niche one that's to the market, but we're finding that we're seeing a lot of improvement, a lot of more take up on this as people are using their own residential houses to benefit their commercial businesses. Okay, so we've got a couple of case studies here. These are a couple of cases that we did over the last sort of 6 months as well. So we've got the New Albion pub in Wakefield. This is an applicant that was presented to Together from one of our intermediaries, a landlord of the local public house, and an opportunity to purchase the freehold from the brewery and secure its long-term future. And he wanted to look to run this as his own business as well. He had a significant deposit, which always benefits as well. But because of the complexities of the actual product and the complexities of his background, we had he couldn't go to the Main Street banks. So we looked at the application. We assessed the application based off the client's commitment in the form of the deposit, the client's experience being in the industry an awfully long time, and obviously the affordability of the current trading business. And the solution that we provided was the £130,000 loan over a 20-year period up to 65% loan to value. So a good sort of lend to a customer with experience, with client commitment as well. So from our point of view, we were secure in the type of business that we were investing in, the type of customer that we're investing into, and also the experience of that gentleman in that particular industry as well. The next case study we've got here is a business called Cycle Street. This is up in York. He was the owner of a cycle shop, wanted to remortgage his existing commercial premises, but was mortgaged with the High Street Bank. The new remortgage would also use to repay some of his high interest business loans, so there'd been an element of debt consolidation, which wasn't within that sort of lender's sort of appetite of lending as well. He also owned a second property management company and was struggling to get the loan he needed from his Main Street Bank because of the way his two businesses were structured. We assessed the application looking at the client's commitment in the form of the equity in the cycle shop, the client's quality in the credit and his strong affordability between the two businesses, a large saving of interest payments, putting the client in a better financial position and could allow him to move his business to the next level as well. The solution we provided here was a £227,000 loan, 15-year term, and again it's 65% loan to value on a remortgage as well. Two real good businesses that had showed affordability, could show common sense lending. We showed that we could have a look at an application and actually individually underwrite it with some real strengths to them and merits to the case, and not just looking at the type of premises that we're looking at or the type of trade that they're in as well. And I think that's one of our biggest strong points at Together, is actually understanding the customer's need and the client's aspirations as well, and through our experience and knowledge is taking that to the next level. So thank you very much for stopping by. I hope this was a little bit more informative and a little bit more about the commercial term business. If you do have any questions, then please then do let us know. Either myself or Chris will be here to answer any questions. And if there's anything else that we can help with, you know where we are. We work very closely with Crystal. They're one of our closest partners, one of our Together Plus partners. And we have an excellent working relationship. And they know all of our products, our processes, and they can really help you and your clients say yes and convert more applications. Thanks very much. Back to you, Chris.
That concludes today's webinar. Thank you all for tuning in and listening. And remember, if you do have any cases you'd like to discuss, please give the guys a call, 01827 301070, and we'll be more than happy to discuss your needs with you. Thank you.